Welcome to Asgardians TechX, the online channel for your daily science and technological news, trending topic and update about the future of humanity, space, agriculture and science at large. Please before watching don't forget to subscribe, like and comment on my channel on how to improve it, and on topics which you want to hear more about. Elon Musk is reportedly looking to tie up less of his wealth in Twitter deal. Tesla CEO Elon Musk is reportedly speaking to large investment firms and other high-net-worth individuals about contributing more money to his $44 billion deal to acquire Twitter. The firms and others Musk is speaking to could take on more financing in the deal, which would tie up less of his wealth in the acquisition, a new report from Reuters said. Musk, who is the world's richest individual, disclosed last week that he had sold around $8.5 billion in Tesla stock to fund the Twitter deal. Most of Musk's incredible $245 billion net worth is tied up in his Tesla shares. After Musk offloaded some of his holdings last week, Tesla shares fell nearly 13% for the 5-day stretch. According to the Reuters report, new financing for the Twitter deal could come in the form of preferred or common equity and could reduce the $21 billion in cash Musk has committed to the $44 billion price tag and the margin loan he leveraged against his holdings, sources said. Musk also pledged some of the Tesla shares he owns to banks in return for a $12.5 billion margin loan, which helped fund the deal. The margin loan could be trimmed based on the new investor interest in the deal financing. Musk is reportedly speaking to private equity firms, hedge funds, and other wealthy individuals about preferred equity financing for the acquisition, sources said. The preferred equity firms would pay a fixed dividend from Twitter, similar to the way a bond or loan pays regular interest. However, the interest would appreciate in line with the equity value of Twitter when Musk eventually assumes the company when the deal is finalized. One thing seems to be for sure. Musk is not willing to take on more debt for the Twitter deal at the current time. Twitter's major shareholders, including Jack Dorsey, who was CEO until last year and is a co-founder of the platform, have also been in contact with Musk about potentially rolling their stake into the deal rather than cashing out their holdings. Dorsey may roll his stake into the investment, as he spoke highly of Musk taking over Twitter and said, "Elon is the singular solution I trust, for improving the social network's operations." Fidelity is one of the large institutional investors Musk is in talks with, and also has had internal talks about rolling its stake. Some investors have urged Musk to back out of the deal. Analysts bullish on Tesla have contributed last week's losses to Musk's $TSLA stake being trimmed due to the Twitter deal's financing. This is big if it materializes, as we believe the Twitter deal has been a $100 plus per share overhang on Tesla's stock due to the Musk financing concerns, shares tied up. Dan Ives of Wedbush said about Musk possibly looking for more investors. Biden administration announces $3 billion plan for U.S.-based EV battery manufacturing. The Biden administration made a massive push toward the eventual domestication of the electric vehicle supply chain in the United States on Monday. The administration announced it will launch a $3.16 billion plan to boost U.S.-based EV battery manufacturing, a small part of a much larger push toward transitioning to electric vehicles. Electric vehicle manufacturing has boosted globally, but the United States is working toward making more parts of the supply chain available in the U.S. as the Russian war against Ukraine launched earlier this year. Material prices skyrocketed, causing many automakers to increase prices. Additionally, supply chain bottlenecks have been prevalent in the automotive industry, among others, as a whole since the COVID-19 pandemic began. Parts and materials coming from overseas are taking extended periods to make it to the United States, pushing the need for domestic parts manufacturing. Finally, the Biden administration announced today that it would push money toward this initiative. The funding will support grants to build and develop battery and battery component manufacturing within the United States. Funded by President Biden's $1 trillion bipartisan infrastructure law, the grants will help bring more battery manufacturing efforts to the country, boosting manufacturing efficiency and providing more jobs in the sector. These Made in America batteries are going to help reduce emissions and create opportunities across the country, White House National Climate Advisor Gina McCarthy said earlier today in a call with reporters, CNBC said. The government has also committed to EVs with specific goals for the sector and internal targets to replace a considerable number of vehicles within its fleet with electric powertrains. 50% of all vehicle sales should be electric by 2030, and 600,000 cars and trucks within the federal fleet will be EVs by 2035. The United States is adopting EVs at the third best rate globally, trailing only China and Europe. However, just 4% of vehicles purchased last year were electric, according to Canalys, a market research firm. Positioning the United States front and center in meeting the growing demand for advanced batteries is how we boost our competitiveness and electrify our transportation system, Jennifer Granholm, U.S. Secretary of Energy, said. President Biden's historic investment in battery production and recycling will give our domestic supply chain the jolt it needs to become more secure and less reliant on other nations, strengthening our clean energy economy, creating good-paying jobs, and decarbonizing the transportation sector. Tesla prepares for monstrous Q2 with Fremont factory running 10 to 20% above capacity, analyst. Tesla Nasdaq TSLA is preparing for a monstrous second quarter as Trip Chowdhury of Global Equities Research released a new note this morning that indicates the Fremont factory in Northern California is running as much as 20% above capacity. On the heels of its biggest quarter in company history, Tesla is working to keep its streak of growth in vehicle deliveries intact. Recent shutdowns of the Shanghai production facility in China have hindered Tesla's outlook for Q2, but the automaker is rebounding in the best way possible as demand increases. The Fremont factory has an annual production run rate of 600,000 vehicles, Tesla stated in its most recent shareholder deck. It builds all 4 currently offered Tesla models, and is the only factory to manufacture each vehicle in Tesla's lineup. Breaking down to about 150,000 vehicles per quarter, Tesla could be operating with at least 30,000 additional cars coming out of Fremont in Q2, a hefty supplemental number to accommodate lost progress in Shanghai this quarter. In April, Tesla was forced to shut down the Gigafactory Shanghai facility due to a COVID-19 outbreak in the region. The Shanghai production plant was kept dormant for 3 weeks, all but axing Tesla's hopes to continue a streak of growth in vehicle deliveries. Tesla's 310,048 deliveries in Q1 2022 outshined any previous quarter, but assistance is definitely needed if the automaker plans to continue growth in production and deliveries. Chowdhury said his routine checks on Tesla's Fremont facility had been evidence of a massive production push in Northern California. This month, especially, has shown major progress. May 2022 is off to an extremely strong production, shipments, and deliveries, Chowdhury said in a note. Fremont factory is running 10% to 20% above capacity, and comments that 2Q is shaping to be a monstrous quarter. The note also stated that recent imagery of the Fremont factory seems to show more logistics vehicles arriving at Fremont, especially when comparing daily pickups of completed cars to the first quarter. Chowdhury estimates there are at least 20% more shipping trucks arriving at the facility compared to last quarter, which could indicate any number of things, including an increased need for vehicle haulers to push completed vehicles to their customers. While the assessment from Chowdhury is based on his perspective, there is certainly an indication that Tesla could be using Fremont to pick up the slack from Shanghai. The automaker has been known to push Fremont past capacity in past quarters, especially during the last few weeks of December, to put an exclamation point on a fiscal year. However, Tesla is also ramping manufacturing at its 2 new production facilities in Austin, Texas, and Brandenburg, Germany. These 2 factories will take less than a year to reach full production, according to CEO Elon Musk's estimates on last quarter's earnings call. Chowdhury remains bullish on Tesla with a street-high $2,300 price target and a buy rating on the stock. Tesla shares have tumbled through the past week as Elon Musk sold some $8.5 billion in stock to fund an acquisition of social media platform Twitter. Thanks for watching. Please don't forget to like, comment, share and subscribe to my channel.